Schedule 1 covers activities to be treated as supply, even if made without consideration. So if I is transferring B some goods without consideration, it can be taxable supplies if that particular transaction is covered under Scheduled 1. So, let us see which all type of transactions are covered under Schedule. Permanent transfer or disposal of business assets. If input tax credit has been availed. Supply of goods or services or both. Between the related person. Or between distinct person as specified in Section 25. In the course or furtherance of business. If the gift value is less than 50,000 Indian rupees in a financial year by employer to employee, it is not to be treated as supply. Supply of goods between agent and principal. This clause is applicable only for supply of goods and not for services. Agent or principal undertake to supply such goods on behalf of corresponding counterpart, that is, agent or principal. Import of services by a taxable person from related his other establishment outside India in the course or furtherance of business. So broadly, we have to cover. We have to discuss now this one by one. 4 categories of transactions, which if made without consideration will be taxable at supply, will be treated as supply and GST is to be paid on that. Like, supply of goods between agent and principal. There is agent who is transferring goods from his border principal. And for that he is not charging anything, then also it will be treated as supply. Since it is without consideration, but covered under Scheduled 1. So let us take one by one these type of transactions. Try to understand when it will be taxable under Schedule 1. The first case in Schedule 1 is permanent transfer or disposal of business asset. The word is very important, it should be a permanent transfer. If input tax credit has been availed. For example, your company's having one machine. Now that machine is permanently transferred. Which means sold as a scrap or whatever it may be, after using it say for 5 to 10 years. And earlier, when you purchased that machine input tax credit has been hovered on that machine. If this condition is fulfilled, then, even if that machine is sold out for zero consideration, nil consideration, no consideration, then also, it is treated as supply. And conduct GST is to be paid. So a very important point to be noted is permanent transfer of business asset. Like, machine is used in a business, and that is leased for 5 years without consideration. So leasing is not a permanent transfer or disposal. Only for 5 years you are giving it. It is not a permanent transfer. So even if you are leasing it without consideration, it will not be treated as a supplier, because this covers only permanent transfer or disposal. It will not be a supply under Scheduled 1. But for example, the same machine, which was used in business is disposed of without consideration. You're just transferring to some of your friend or some known person, and you're saying that okay it is a scrap, don't pay me any consideration, just take this machine to you. No need to pay any consideration. But on this machine, if you have taken input tax credit earlier, then only it will be treated as a supply. If you are not taking any input tax earlier, at the time of purchase of the machine, then also, it will not be treated as a supply. So 2 important things in this first case you have to remember is that there is a permanent transfer of the business asset. And on that input tax credit was earlier availed. If both these conditions are fulfilled then, even if that is made without consideration, then also, you have to pay GST. You have to treat this as a supply and pay GST under this. How you have to calculate the value, how you have to pay the GST, etc. That all will be discussed in subsequent chapters. But for the time being, just keep in mind that this transaction made without consideration is taxable. Then second case under Schedule 1. Supply of goods or services or both. between the related person or between distinct persons as specified in Section 25. In the course or furtherance of business and gift of value less than 150,000 Indian rupees in a financial year by an employer to an employee is not a supply. So basically there are three aspects you have to look for. Very important. The first one is, this is supplies between related persons. So, what is the definition of the word related person? Let us see who will be treated as a related person. And second is between distinct person, as specified under Section 25. We have to discuss this in detail in the registration topic under Section 25. But just quickly giving you the hint what it means. Distinct person under 25 means the person who is registered having same PAN number. Like a limited is having 4 different offices in 4 different states. The legal Chennai and Mumbai. Then as per this law, when we will discuss about registration topic, you will come now. That is 4 different offices in 4 different states have to take a separate registration. So, a limited will have 4 different registrations. But all these registrations will have same PAN number, because they are the units or branches of a limited. So they are treated as distinct persons under Section 25. So, just in simple words, what you can understand by this phrase distinct person, as specified in Section 35 means the branch offices of the organization. In simple words you can just map in your mind. So if there is a supply of goods between these branches, inter-branch transfer from Delhi to Mumbai, Mumbai to Chennai, branch-to-branch transfer of goods or services, then, even that branch transfer is without consideration. It will be treated as a supply. Now second thing is Section 15 defines the related person for this act, which covers a list of following. Again, this related persons we're discussing in a different topic in detail. So just quickly, have a look at which type of persons are treated as a relative person. Such persons are officers, or directors of one another's business. Like Mr. A is director in B Limited and B director in A Limited. Cross-directors. Such persons are legally recognized partners in business. Like ABC are the partners, so ABC are related to each other. Such persons are employer. Employee, Mr. A is employed. Mr. B is employee. They are related. Any person directly or indirectly owns control hold 25% or more of outstanding voting stock or shares, so both of them. Like A Limited is holding 30% shares in B Limited and C Limited. So, A, B and C all will be treated as related. Don't worry, we'll discuss in detail about this in a different chapter. One of them directly or indirectly control others. This is like holding a subsidiary company. Both of them directly and indirectly controlled by third person. So, it is a holding company. He is having subsidiary and he is having another one as one subsidiary. So there is an indirect way of control. Together they directly or indirectly control a third person. So jointly, they're having a subsidiary company. It means A is saving 40% share, B is having 40% shares in C Limited. So A, B and C will be related. They are members of the same family. Like husband, wife, son, daughter. All will be treated as related to each other. And one more is the sole agent or distributor. So if a company is selling the product through his sole distributor, sole agent, it means that distributor or agent will not supply any other products apart from that company's products. So that will be treated as a related party. So, any supply between these related person without consideration will be treated as a supply, and is taxable. But an important condition again over here, is it should be in the course or furtherance of business. It means if husband give a gift to wife, that will not be treated as a supply. So let us try to understand with few simple examples about this concept. Transfer of a car, used in business, the subsidiary company without consideration. H Limited is a holding company. H's Limited is a subsidiary company. H Limited transferred the car, used in his business to subsidiary company without consideration. So whether it will be supplied taxable? Yes, because they are related to each other. So, even if it is without consideration, it will be treated as a supplier, and on that tax is to be paid. Personal gift by husband to wife. Now this is not in the course of business. It's pure personal transaction. This supply has to be in the course of business. Personal gift by husband to wife is not in the course of business, so it will not be treated as a supply. Diwali gift to a manager, say gold coin worth rupees 70,000. So one company has gifted a gold coin of value rupees 70,000 at the occasion of Diwali. So whether it will be treated as a supply? Because this transfer is without consideration. It is a gift without consideration. Yes. It will be treated as a supplier. And on this company has to pay tax. Only thing here to remember is such kind of a gift, by a company to employ. If it is less than 50,000 in a financial year, by an employer to his employed, then it is exempt. Then it is not taxable. Like Diwali gift to another manager. For rupees 40,000. Same gold coin but small. And that value of that gold coin was 40,000. So that will not be treated as supply. Company need not pay any GST on that. But for 70,000 worth free gifts or it transfers, company has to give GST. It will be treated as supply. Then the next clause. Under Schedule 1. Supply of goods between agent and principal. Now here, be careful that this clause is applicable only for supply of goods, and not for supply of services. An agent or principal undertake to supply such goods of principal. It means, obviously, that agent is supplying goods on behalf of principal, and principal is supplying goods on behalf of agent. Like B Limited transferred 10 units, free to agent of P Limited. P Limited transferred 10 units free to Mr. A. Mr. B is an agent of P Limited. P Limited has office or godown in Mumbai. And it just transferred 10 units to the godown of Delhi of Mr. A, who is his agent. Obviously there is no consideration. Without consideration, this is a stock transfer kind of thing. So on this also he has to pay GST. It will be treated as supply, even though it is without consideration. Then the last clause is import of service by taxable person. Over here the important word is import of service. So, earlier case, it was only for transfer between agent and principal of goods. Their import of service is only covered, not the goods. Import of service from home, from related or his other establishment outside India. And it should be the poser for their business. Like to take an example. IT consultancy services providing free of cost by US parent company to Indian group company. Now see, in this case what is happening is, there is first of all, import of service. IT consultancy services are provided from US company. It is from a related company, or other establishment of the same company outside India. US parent companies are related one. Or you can say it is other establishment of the same Indian company. And whether it is in the course or furtherance of business. Yes. It is for the business. The IT consultancy is providing free of cost. So on this free of cost consultancy which is imported from outside India, even without consideration, GST is applicable. It is treated as a supply. This again we have to discuss in detail at a time of IGST when we discuss. So in short, what we discuss is there are broadly these four categories wherein the transfer without consideration is taxable. Permanent transfer of business assets, on which input tax credit is added. There was number 1. Supply of goods between related parties or distinct parties, that is branch offices. Supply of goods between agent and principal. An import of services between a related person in the course of business.